Hi everyone, welcome to Wealthy Mindset. My name is Oliver. Thank you so much for watching. I really appreciate it. Hope you guys are having a great day, like always. And in today's video, I'm going to be covering the Federal Reserve meeting that happened today, March 17th, 2021, in terms of when they're expecting interest rate hikes to happen and occur. And I'm going to correlate that to the stock market, specifically the Dow Jones, giving you guys fundamentals that are not really related to the Dow Jones only anyway, but going to be analyzing the graph for the Dow Jones. Now this video is going to be extremely interesting because obviously the overall market correlates with individual stocks as well, and definitely encourage you to watch it throughout the end. Now if you do like videos in terms of stocks and like videos like these in the stock market, definitely encourage you to like subscribe. Helps out the channel. Thank you so much for that, by the way. Really appreciate it. If you do like this video, consider dropping a like. Thank you so much. Now in terms of Federal Reserve for the interest rate, it looks like that they're not going to be increasing it for the time being. Powell stated that it's not necessarily in their agenda at the moment. They do see the economy recovering, but obviously it's not going at a faster pace than they're expecting. Well, it is going faster pace than they're expecting, but it's not enough to increase interest rates that like he mentioned. So we have 4 out of 18 voted for interest rate hikes in 2022, but I would not be concerned with that because that's definitely not the majority. And then we have 7 out of 18 voted for yes, an interest rate hike in 2023. Again, keep in mind, even though it looks like it's not possible for interest rate hike anytime soon, keep in mind basically anything could change. Essentially in 2 years, nobody knows what's going to happen. So then we would probably have more voting for yes for 2023. I personally don't think we're going to see one interest rate hike anytime until at least 2023. Some are saying that we might see, even though this came in, actually technically this confirms that there won't be in 2022, but some stated before this meeting today that we might see one hike in 2022 and then another hike in 2023, technically 2 or 3 hikes in 2023. But after this meeting, I personally think if we did see a rate hike, we would see one by 2023 and then on after. So we had everybody else in terms of out of the 18 vote yes for a rate hike after 2023. So there's that. Keep in mind, Powell stated that it's not really in their agenda for the rate hike. And in terms of the stock market's looking pretty okay. So I'm personally bullish on the stock market, and I'm going to explain the reasons why. But I want to talk about the 10-year Treasury first in terms of yes, it's increasing. Yes, it's increasing at a fast rate, which the 10-year Treasury represents inflation technically by the way it's going. The only thing is though, this is just a technical sense. Powell stated that we're not going to increase interest rates at the time being for this because it only represents the technical side, does not represent the real world. So don't worry about that. And then in today's meeting that reflected that as well. And the reason why I'm interested in terms of low interest rates is like I stated in the past. So this is the Federal Reserve interest rates, and it's pretty much at 0.25 basis points, essentially zero. And the reason why that's beneficial for the markets is because when you have low interest rates, like I mentioned in the past, then companies could borrow more money for research and development, increasing their earnings. And when they increase their earnings, their price to earnings ratio decreases, making them valuable stocks to invest in terms of like the company wise. If the price to earnings ratio is high because their earnings are low, then that means they're essentially overvalued. And it's a harder case to be like, I want to buy into this stock because it's overvalued, so you would not want to do that. That's the thing. So low interest rates, companies could invest in more for research and development, therefore earning more money in terms of earnings, quarterly reports, and all stuff. Now, if we go to unemployment rates, unemployment rate is dropping. This is all in the US, by the way. So unemployment rate is still dropping. We're at roughly, I believe, 6.2%. I think recently it dropped even more. This might be a little bit outdated. And then we have, in terms of bankruptcy numbers that I've showed in the past, still low. They're actually dropping even lower nonstop, so that's good. That's a good sign, which is surprising though. But keep in mind, because we had the stimulus bills and all that stuff coming out, helping businesses and et cetera, we just had another one passed recently. I believe it was March 11th or March 10th that it passed. So that's more funding coming in. I'm going to be talking about in a future video about inflation, because inflation is not necessarily great. You mainly have inflation by printing out money though. That's a real way to like get inflation. All this other ways in terms of like, let's just say wages and all that stuff, that's not really a way to increase inflation. Inflation is literally by printing money, and there's a negative way. It basically correlates to, it's essentially a tax, but I'll elaborate more on that in a future video. Definitely subscribe if you're interested in that. I think it's going to be a good video, but I'll try to get these videos out as much as possible. And then Next, we have United States corporate profits. Again, like I've mentioned in the past, it's higher than it was just before the pandemic, so that's a good sign as well. Now, if we look at the graph is looking great. So I want to do a disclaimer. I'm not a financial advisor. I'm not a professional, and everything I do share with you guys is just my opinion. It is not advice. So please do not buy or sell based off of information I show you or the opinions I do form. The reason why I'm pretty much optimistic overall still is just in case if you're a new viewer though. We have an upward trend support line or upward trend resistance line dating back since the dot-com bubble, 1999 specifically. Resistance right here, upward trend, passed ever so slightly, but it was a false breakout. And then technically had a small false breakout in 2018 as well, but it was back tested, came back down, then tried it again back just before the pandemic twice, but back tested twice, failed, had a V-shaped recovery, then had an upward trend support line from the bottom of the pandemic with 1, 2, 3 touch points right here. So that's a third touch point. Ended up breaking through the upward trend support line, bouncing off the 1999 upward trend support line right here. If you go in closer though, this is the 5-year chart, they'll keep in mind, there was a little bit of a false breakout, but because the stimulus bill came at the right time, so it just worked out that way. So it's essentially a bounce anyway to the upside, and then got back up above the upward trend support line. And overall, I think we're just going to go in a further run up. I projected 33,000. We were going to come up relatively soon. We ended up already hitting it faster than I thought, to be honest. I think I stated end of March we would hit it, but I can't remember exactly when, but I thought it was going to be close, but it came closer than I thought. So I think we're just going to continue to the upside. And the reason why, in case if you're a new viewer, what I'm trying to say, the reason why I'm optimistic is we passed a massive upward trend resistance line, right? Passing it is not a small task to do, and doing that is just, I think it's going to be quite a bit of a run. At least we have a run until, I would say, at least end of 2021, worst case scenario by October 2021. So that's what I would expect. But overall, pretty bullish based off all this stuff. Also, another thing is too, you have the stimulus checks that came in recently for the stimulus bill that passed. So now you have everybody who could spend more technically, that they had more money coming in just recently in terms of stimulus checks. Plus everybody's been inside for the most part. Yes, people have been spending here and there, but primarily if I had to guess, a lot of people have more money saved than they've spent, kind of thing, if that makes sense. So you have saved money that's going to be coming in once everything opens up fully. And then you have the stimulus checks that have been piling up, well, not piling up, but that came in recently. So stimulus checks plus savings, once everything opens up fully, we had a couple states already opened up. So then technically the floodgates would be open in terms of stimulating the economy. So that's a benefit. Plus, I've mentioned in the past, there was a chip shortage. You could see in terms of, for example, GM, the automotive sector, stuff like that, other sectors too. Chip shortage usually amounts to they underproduced they underproduced what they thought the demand would be, and the demand's actually higher than what they thought. So that's technically an uptick in terms of growth. It's a good indicator that there's growth there too. So given all that stuff, that's pretty good. So that's pretty much it for the video. Thank you so much for watching. I really appreciate it. Hope you guys liked it. If you did like it, consider dropping a like. Helps out the algorithm in terms of YouTube algorithm and all that stuff. Thank you so much. Helps out the channel, that's what I mean to say, not the algorithm. Helps out the channel because the algorithm, etc., etc. And if you do like videos in terms of stocks, passive income, mortgages, credit scores, financial freedom, consider subscribing so you'll be notified the next time I do upload these types of videos or those videos. And if you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. Thank you so much, and I'll see you guys in the next video. Peace.